What is going on, guys? Let me just fix my mic. There we go. And today it is Sunday, 23rd. So just the last full week of January, which is crazy to say already. But today we're going to be back testing some more WWA/lit trades. You can see them right here. There's going to be a bunch here, right? 1, 2, 3, and 4. So we're going to go through this whole thing starting from the higher time frame just to see what I believe that they were looking at and where their logical targets and everything would be. Okay, so the entries were all right here. So this was the actual day that happened afterwards. But let's go through it and let's break it down from the top. Okay, so I already brought it back down here. So let's go to the daily first. So this is an important time frame, especially for this move that happened here, because what you can see here is a couple of things. Like the first thing that I'd be looking at is, first of all, we bounced off of a weekly level, okay, which I don't want to go back into because I've talked about it a bunch on this channel already, that specific level on the weekly. But so bounced off the weekly level, and then look what happens. Okay, on the daily that we're on right now, we have daily time frame, we have a sweep right here and a break in structure right here. So now on the daily, we're moving up, and you can see what happens. Look what happens as soon as we tag this order block, right? The last down candle, we tag it, go up. Where to? Break even more daily highs, right? So the next level of daily structure, we sweep it and we get somewhere into here, this is actually what we were looking at, or what I was looking at for trade short from here, because we had equal highs in the POI right in here. Right? So that being said, we get that retracement back down. Where to? Well, now we go to fill up the imbalance right there, tags it, and we get a nice, pretty big move off of that, right? 120 pip move. Again, leaves some equal highs. Couldn't break over them. And then we come back down to mitigate something deeper into this level, okay? So, but this is important now, because now we broke daily structure, and what did we do? We have this impulsive move, and now we're just developing this consolidation. So what we know about the market is that there's a couple things that will happen. Either you have a consolidation, you have a sweep, a break, retest, and go. That's going to be one structure. Or you're going to have consolidation, break, retest, and go, right? This is the continuation structure, like that. So those are the two kind of scenarios that are going to happen. And so what do we have right here? We have this consolidation. So what are our options? Well, we already really did sweep as a couple times, right, into this consolidation or into this order block. So the next potential option, or what I would be looking at, is something like this and then going up like that, right? That would be the continuation. Or this is going to be consolidation, reverse, and then come back down like that, right, for lower prices. Those are the two scenarios that I would be looking at. Specifically because we are bullish on the daily, that you're looking at that next move as a potential bull. And now that's basically it for this time frame. So let's go down to the 4 hour, okay, to get some more clarity on what's going on here. So again, broke daily structure, bullish, right? That's actually, I'll just take that off. You can see daily structure, we broke. Yeah, it's just a wick, but again, it just showed the fact that this wick through shows that this, I guess you can call it a supply, right? This area where price should have sold off from, should have respected, couldn't respect, and therefore it's weak, right? It's a little bit weaker than you would anticipate. And then look what happens as a result of it. We get this massive correction out of it. So it just goes to show that this was weak. We get a correction. We know that we're more likely to be upside than down than to continue down. Now, what do we have here? We have a sweep on liquidity. Did it mitigate anything that we didn't see on the daily? Well, yeah, look at this. These last two down candles, that's an order block, right? That's going to be an order block on a higher time frame. Look at that. We mitigate it. And now we break 4 hour structure. So we have a nice sweep here, and we break 4 hour structure. We break another 4 hour structure, and we break the 4 hour / daily structure, right? Because right here, you can see again, we get through it and we just wick a little bit through it. And that's all that was needed. That's all that was required to grab the liquidity that was resting above this high and bring price back down into a discount of this trading range right here, right? If I just mark out this trading range, you can see what defines a trading range for me is this, right? Consolidation, sweep, breakup, and then that. So then this whole thing is going to be our trading range. So what we want to see is back down into discount before going, right? If it's going to be a continuation. So what do we have here? Consolidation, sweep, break above. Now we broke structure because think about it. We have 1, 2, 3, 4, 5, right? All creating the lower highs. You get this, you finally break above this one and you break above this one. So now we've changed the structure to bullish that fits our daily bias. And now we've went down into a discount into this wick imbalance right down here, because what a wick is essentially, if you think about it, is that it's a wick on this time frame, but on a smaller time frame, all it means is that price started off here, it went down super aggressively, right? So you had maybe like a series of sell candles like that, and then you had an order block or something like that that completely consumed it. And so on the smaller time frames, you're going to have imbalances and stuff that needs to get filled in here, or you're going to have an order block in here that needs to get mitigated. Okay, and so that's all it is. And so that's why it's good to mark out the actual rejection block, as ICT calls it, right here. And then also the 50% of it is what I like to mark out as well, because there's usually an order block that you can go and refine on a smaller time frame within that. Okay, so look what happens. Price breaks this high, comes back down. Now something interesting, just like I said there, right? We have another wick up here. So there's likely to be an order block or something up here. It just hasn't been mitigated yet. So that would be a good target because you're still in this range, right? We have to respect the fact that we are still in this range. And so price is likely you're still likely going to get a response like that, even if it's just a correction, just a consolidation before going. So if you're going long from right around here, you can be looking at multiple areas to target. Okay. First of all, we have our trading range. The likely scenario is that we're going to get up to here, right? We're going to break this high because that's the high of our trading range. Again, if you're thinking about a bullish continuation structure like this, if we're going a low, a high, a higher low, well, then what's the next target? It's likely to be that the higher high is going to be the next target, right? So this is our higher high level right up here. Now for safety, especially if you're day trading and you have a really nice tight stop, the area that I would see price reacting to is going to be here. First of all, I see a sweep right here with this candle, nice strong candle, immediately consumed. So to me, this is a nice area that I'd be looking for to at least reduce position size and take some partials. I know that it's likely that this gets taken out, but at the same time, I'm not going to hold all the way through in case we have a bigger correction like this, and then it comes back down to mitigate these levels, right? Because this is a super valid option for it to do, especially on the 4-hour. You could see a sweep here, a break here. So we have consolidation, sweep, break up. So it could easily come back down in here. So this is why I would be managing my position here, because I wouldn't want to lose all of this profit. Not only that, I also don't want to get taken out at break even if there were some entries around here. Okay, so easy. So now we have our trading range. We know it's good. And this is where they entered the position here. So I'm just going to take this off. So you can see mitigated. And then right here, we also have our last down candle on the 4-hour. 1, 2, 3 immediately consumed. So this becomes our order block after mitigating something here. We have these equal highs right here. Okay. These equal highs right here. This sweep on structure. And this is where they entered within right here. So now what do we know? We know that we have, here, actually, let's go down to the 1-hour. Okay. 1-hour, look at right where that 4-hour level is right at this 1-hour block, right at this 1-hour breaker where we had, this was the last down candle, or sorry, the last up candle that caused the down move. And you can see all bearish candles, and then we consume it immediately, right? We have this efficient order flow coming up and consuming this price leg. As soon as we get right to it, you can see last down candle, explosive move out. That just shows that this was a really a good level, right? This is where that liquidity was, and the counterparty was entered right there. Boom, entered. Now we change the structure. It looks like it was going to respond here. No, what happens? It comes down, builds liquidity to get swept. And now, so on the 1 hour, sorry, on the 4 hour, we have this structure right here. Okay, so we have one. On the 1 hour, we now broke this down leg, right? This structure. So now we have on the 1 hour, we have this right here. And now what we can see here is that we also have an order block right here, right? This last down candle. Bring it over. So let me just get rid of that. So now if there's a break, this is likely going to be a break on a smaller time frame. So then on a smaller time frame, we have another break right here. So now we have 1, 2, 3 breaks in structure on different time frames, all signaling upside. And that's why this one right here was going to be a great area to look for buys only, right? To look for buys only. Okay, so now let's go down to the smaller time frames to see basically where they entered. But that's the logic, right? I hope that makes sense as to why they were bullish here, because it was very clear, it was very evident as to why price was going to go up. We'll also look at refining anywhere in here potentially, because right here you can see this, right? We see, again, that sweep on structure, break on structure right there, or sweep on liquidity, break on structure. And so now you can, like, this has already been mitigated up here, but there's probably something on a smaller time frame that needs to get mitigated at the 50%, right? Just above this inducement high right there. Okay, but again, I hope that makes sense. Yeah, let's go see on the 15-minute. Again, let's see if there was anything in here. Yeah, you can see that last down candle, up move. Okay, so you can mark off the whole thing, and you can see that that's exactly where price responded from right there. Comes back down, mitigates, mitigates, mitigates. You can see that how efficient this move is. It's beautiful. And then we get this period of inefficiency. It comes right up to this order block, right up to this order block. And then we get that fall right back down, that automatic consumption of that clean leg right back down into that order block. Then again, beautiful, just as anticipated on the 15-minute, we have a sweep of liquidity. We have a break of structure right there. Okay, so now we have our 15-minute trading range. Why is it a 15-minute trading range? Because we have a sweep, we have a break of structure, boom, inducement, and now we come back down into that 1 hour order block. So again, where's our target of this range? Right here. The target of the 1 hour range is right here. Okay, and then the target of the 4 hour range is right up here. Okay, so we really have a lot to go off of there, and you can see, look at this, right? Last area of imbalance was right there. You can see that that was really where the reaction came. We have this inducement right there. So you could have definitely been targeting these clean, relatively equal highs here, inducing this point of interest that mitigated this right here, right? Which was also the hidden base right there. Okay, so this mitigated this, and then we had a reversal structure right here. This was never mitigated. We had inducement. So that would be a really good first profit to be taking a majority of your position. What I would be taking majority, because it's only what, 20 pips away from the actual 4 hour target. So I'd be taking out majority of my position there anyways. But I hope that you guys can see that. So this is where they entered from, right? In this kind of little area right here, they entered, let's see, 1, 2, 3, and then 4. So yeah, 1, 2, 3, and then they entered a fourth position right here. Okay, in and around this zone. So all down here and then down here. So let's go break down and let's see if we can find out why they entered 3 positions there and a fourth at the top. So let's go down to the 5-minute. Let's see what's shaking on the 5-minute here. And we'll pull up our kill zones, right? So we could see, oh wait, sorry, I don't have this is all in London. Okay, so don't worry about that. You could see that this one happened. I can already see where they probably entered. They probably entered right around on this candle. For this one, if that was in New York, beautiful. But yeah, on my kill zones, I only have New York because I only trade New York. But you can see here, so we come back down into this daily order block. Where to? Let's see how close we are to or where we're at in the 50%. Right? Boom. right there. So 50% of the daily order block, or not daily, sorry, the 1 hour order block is right there. What was this line again? Oh yeah, this was the 4 hour order block. So look at this. We have the 4 hour order block here, 1 hour, 50% here. We're getting a significant amount of confluence in and around this level to look for longer term longs, right? There's nothing really here that I see that can be refined on the 5 minute. Let's go down to maybe the 3 minute. Let's see if something's clear on this level. Well, yeah, you could see here that this was swept just barely though. Yeah, just barely, but it did grab liquidity. So what you can do is actually refine it. You can probably just refine it down to here. I probably wouldn't refine any more than that because you can see we already mitigated off the rejection block there. So it probably should stay within this candle. This last down candle right here, I would assume, right? And you can see that that's, but again, I don't want to over refine because it could easily wick in again to fill something in this wick, just as it might fill something in this wick that just wasn't filled yet, right? So we just don't know. So I would just keep it at that, honestly. And again, just look for refined entries. And so, yep, you could see it just like there. We had this move up, right? This was going to be the one that people would be going long on, right? If I just mark this out like this, let me just change this up to, I don't know, like that. Okay, you can see, let's mark out structure here, boom. We go down, but this one is where timing is going to be an important thing, right? Because again, you see the break right here. So this is, I can guarantee this is where a ton of people would be going long at if they're like the smart money traders, right? Where would they look at? Right here. Right? They'd be looking at somewhere like here, they get stopped out and then the real run happens. And I'll show you why that would happen in this scenario, or things that you could watch out for, or that I would watch out for. First of all, see how this leg comes up super inefficiently, super clean, and then it comes back down basically the exact same. There's no liquidity that's sponsoring this order block here. There's no liquidity. And so because of that, and what I mean by that is, look, we have this move like this. We have a break of structure and then it comes down like this. There's nothing here where there would be people would be putting stop losses or something like that to sponsor this point of interest. And what I mean by sponsor is I mean that it would provide the liquidity to make this order block or this point of interest work, right? So where is their liquidity though after something like this happens? Well, look at this right underneath there. If people are going long there, where's their stops? Underneath, they're going to get grabbed. And then there was your liquidity, right? That was your liquidity pool. And so you can see it right here that this is where that liquidity pool would be. As soon as it gets tagged, then you start making bullish order flow to go long. Okay. So that's something of interest here. And look at here. Why did this one work here? Well, look at this. You have an inducement right here, and you have an inducement right here, right? So you have two areas of inducement that are inducing this POY, and you can see that probably on a 1 minute, right? On a 1 minute, this is imbalance. And you can see, look at that. The last candle right there, the last imbalance fill, it tags it, and then we get that reaction. Okay, so that's exactly why that happened. And additionally, look at the timing. This happened at 1 a.m. I'm not going to say too much more about that, but that happened at 1 a.m. And this one happened at around 2:30. So you guys can look into that yourself for the daily cycle. But that just shows you why. Okay. Now, that being said, let's see what happened here, right? So again, at 2:30, we see a break, or we see a breakdown, grabbing liquidity in our point of interest, right? This is the lowest that price could possibly go. Like, it should not break through this. It should be staying somewhere in here within our 1 hour, our 4 hour, and our refined order block down here. So now that it's London, what happens? And I'm just going to take these off now because there's just no point in having them and clogging up our screen. But what do we see here? We have a sweep on liquidity. After sweeping the major liquidity pool right here, we have break on structure, and then we have that retracement back down. Now, this one, again, you have that rip up, rip down, and there's no liquidity really inducing these levels. However, this one is different for one reason. We swept the major liquidity pool already, whereas here there was no real major liquidity pool that was swept, and this is the Frankfurt low right here, right? Frankfurt low, we got that taken. Now it's going. What did this sweep? This swept absolutely nothing. Okay, and because of that, that's why that this reaction didn't happen. And so this one, now that we swept this low, now we can start to take them. Again, not my favorite. To be honest, I don't really like when this happens, when it does that like kind of V shape like that, or A shape, I guess you could say in this case. I personally would like to see this. Like you see something like that, and then like that, right? Because then that's providing the liquidity to that. However, because we're back testing their trades, this is exactly what they did. Okay. And just to let you know, so what happens here, we have this last down candle right there. Trade 1. Trade 2, we have, see this order block, we have this up candle, down candle, immediate consumption, break of structure right here, and then break of structure right here. So now we have even a higher time frame break of structure. So if we go to the 5-minute, let's see, you can see this was the 5-minute. Okay, 5-minute real structure here. So we have a break in the 5-minute, and now we come back down. Look at this. It's just a wick on the 5-minute. We go down to the 1-minute again. See if it can be refined even more. Yeah, that's basically it. And so I don't know if they entered at right on the order block. I think they entered right on the order block, potentially at 50% as well. So they entered right here on this one. Certainly they entered here. I don't know if they did a 1 pip stop or if they just keep the 2 pips. I know they prefer to keep a 2 pip just for any sweeps or anything like that might happen on the lower time frame, but we'll just keep it at 1.5. Again, we have right there the entry stop just below here, so we'll just say 2 pip stop right below this low. There you go. And then there you go. And now we break even more structure up here. So the same thing applies. This level, right, this high right here was broken via this down candle right here. So this down candle, this order block was immediately consumed, and this was the last down candle that provided the liquidity to sponsor a move up to sweep this high and take out this high. So now we broke out multiple time frame structures, and you can see that every time that the quote unquote demand candles, right, are holding, whereas the supply quote unquote candles are not holding, right? They're getting broken. They're just getting wicked in. They're getting wicked past. They're getting wicked past. They're getting wicked past. It just shows a weakness on the sell side. And now buys are going to be in control. So we mark out this order block here. Okay. The reason why I personally wouldn't have taken this one, and I believe that they didn't take this one, is because of the ability for price to come down to the extreme. Okay. So this is the extreme level right here, right? So it could have easily came back down, wicked down, and then continued its move. But what ended up happening was it respected this, right? You can see we get our sweep and we get a break of structure right here. Okay. So that's why I believe that they didn't take this one. That also broke this structure as well. So that's why I believe that they didn't take this one right here. However, going with order flow again, we see a break of structure right here. Let me just take this stuff off, clean it up a little bit. You can see we have on the higher time frame now, because you can see, look at the size of these corrections, right? This correction down, or this retracement back down, this retracement back down, they're the same size. But then you look at this one, right? This is a higher degree correction, which means that now you have this as an impulse leg, this as the correction, this as an impulse leg, and you'd be anticipating something of equivalent size, just like how you're anticipating something of equivalent size here, based on the size of the moves. And you can see, so you're looking at something equivalent to this size, and that's exactly what you get, right? You get something equivalent to that. Now, when that happens, again, just like we had right here, where this was the candle that broke structure, this was the candle that broke structure as well, that broke significant structure. It actually broke this one as well, right? So we had our sweep, we had our break of structure. All of this is all mitigated down here, right? All of this is mitigated. And so this is the last point that has been unmitigated, which is right here, okay? Which is right here. So I believe that this is where they took the third one, the third trade, stop just under here, maybe 2 pip stop, okay? And there we go. So remember what we said, this is going to be our structure on the 15-minute swing. So therefore, that would be a target. Or sorry, was it the 1 hour? No, it was 15. It was 15. Right? 15. 1 hour is going to be the equal highs, which are going to be right there. So you could have targeted there as well. Okay. And then this is where the second or the entry came in New York. So now we had London running, right? London running up. What do we have here? Again, we look at the correction, the sizes of the corrections, right? We have 1, 2, 3, 4. All of this, to me, is not in the same degree. That's in a lower degree of this whole price swing. Then we have that's roughly equivalent to these, right? Roughly equivalent to these. And you have up, down, again, roughly equivalent, up. And so now this is going to be your extreme point of the price leg. You could see that we're just continuing to make higher highs, higher lows, higher highs, higher highs, higher highs. And eventually it's going to come back down to test that extreme point of that price swing. Okay. And so let me just delete that again. Perfect. So now we know that this is going to be our extreme on the price leg here. And you can see what happens. Where was it? Sorry. See these down candles, consecutive down candles? That's an order block on a higher time frame. And you can see it was mitigated with this candle. Boom, we got to push up and we break structure right here. Okay, so now what's our trading range? This is going to be our trading range right here. If I just mark it out like this. Okay, so this is going to be our trading range. These are the setups I absolutely love, and especially because of the timing. If I just, again, pull up the kill zones, you'll see what time this came down at, 8:20. Perfect. We have these equal lows being pent up right here. There's honestly a sell right here that I see, and I'll break down the sell, but it might have just been, it would have been good as a hedge, to be honest. But right here, you can see entry, stop loss, about 3 pips. Again, your first target, like if you're just intraday trading, is right here. But again, we know that our level that we're looking at is this sweep above this inducement and mitigation of that 420. But I would honestly put it at the 400 big figure, just because it's right above that inducement right there. So that would be it. You can see how this last leg comes up very inefficiently, tags it, inefficient, inefficiency gets covered real quick. Okay, so that was I think that was the last trade. So now we have 1, 2, 3, and 4 trades all completely back tested, all done, which is great. And so you can see that right around here would be your targets. You can see that there were some significant moves here, some 40, whatever R, 30 R, 33 R. Again, I think that you'll realize that I don't know if they show the risk to rewards on each one, but they'll probably be a little bit smaller because they add a little bit to these stop losses. Like I'm pretty sure they'll add a little bit just to cover for spread. They have to, and so yeah. So I'm sure maybe we can look into them a little bit later if they show the risk reward on them. Maybe not, but if they do, then we'll look into them and see how big their stops were. But yeah, that was it. But here I'll talk about the hedge here because this was a really good one. So we broke structure. Okay, we broke structure, and then all of a sudden, what do? We have a sweep on liquidity, right? All bullish candles here come back down. It looks like it was going to go up from here. It didn't. It failed, and it broke structure right there. So now we have a smaller time frame move, right? And again, if this went right down to here, it would have been invalid. But the fact that we made these equal lows first, and then we came up, where does it come up to? It comes up to take this inducement right here to this liquidity pool, or this point of interest, sorry. And then we have a tap up into it, and we actually have another micro sweep right there and another break of structure here. Okay, so that can be your confirmation on this, that this point of interest is going to hold. comes back up, doesn't really tag anything. It just fills up this little imbalance here, proceeds to break down. At this point, it comes back up, and this is used as an inducement right here for this last up candle, or sorry, this is the candle that swept liquidity. So this is the one that we can use, and then that mitigates that, and then break structure again, and it leaves more equal lows. So this was the structure break. So now you can see that on this leg down, we actually have some bearish order flow. You could have taken this one. I think this one was okay to take. However, I think it's a little bit more risky than taking the next one. And the reason being is because we held this structure, okay, right here. And so this could have easily gone up like this because we are in a bullish structure like that. And yeah, but the fact that it failed, it rejected and failed, now we're putting in this bearish order flow. So that next one it should be good to take. Okay, so we have sweep right here. Let me just change that to sweep. And then again, right here, this is the last up candle that caused the sweep. So yeah, you could have taken either one, but this one would have been probably been the best one, because now we have serious equal lows here, and then with that equal low there, we have an inducement, we have our sweep candle, we have a break in structure, and we have at least a target down to here that we can go for. But ultimately, if this is going to start failing, right? Because again, we can see liquidity building up here. So potentially what we would be anticipating is that after we take out this big structure right here, right? These equal highs, there's going to be liquidity there. So potentially we're going to get a deeper retracement to make, again, like I said, remember how I said how this are all, you can see they're all in the same degree. Eventually this degree is going to end, and we're going to get a bigger correction like this, right, to make that degree before continuation. So it's understanding the fractal nature of the market and how the market moves. But you can see here that it was still respected, and so therefore we can we could have taken that as a hedge and then continue down. But yeah, like, so maybe take partials there, rest would probably be taken out break even, and then that was it. So yeah, you can see, and then we get the response from here right off that level. Beautiful response. And that's it. So that was all the trades that they took. Let's see. Okay, so they did show the R there, but I don't know. Okay, at 12966. Where's 12966? 12966. So you can see right above, basically right above this level. Let's see if our RRs were right. 12966, right around there. Right around there. They probably took it from the high of the wick here. Like, I'm pretty sure they took it from 1.300s. Okay, we'll just say 1.300s. Okay, roughly around there. And what did they say it was? 118, 110, 111. 1 to 18. Yeah, so they definitely added a little bit on there. Let's see if 2 pips. Okay, 1 to 18. Right at the 300 level. Yeah. See, so they added a little bit extra on that. And then what they said, this one was 1 to 10. So definitely added a little bit more onto this one as well. Probably 2.5, something like that. And then what did they say this one was? 1 to 11. Yeah, so they added definitely a little bit onto that as well. Right, 2.5 pips around. So yeah, it just goes to show. See, so like maybe on TradingView, it looks, it looks nice to be hugging the stop loss right to that low. However, in reality, either they're entering a little bit higher and then putting their stop underneath that level, right? So maybe they were entering a little bit higher right on the wick of this candle here, right on the wick of that, and then adding a little bit extra, adding a little bit extra, adding a little bit extra. So again, it looks good to be entering right here and putting your stop loss below and getting like a 1 pip stop. But the reality is you have to add a little bit just for that for that spread and everything, right? And so, yeah, that was basically it, guys. I don't know. Yeah, that's all. That was a pretty good back test. And there was a lot, really a lot that we had to go through there, but I think it was really worth it. So yeah, I hope you guys enjoyed that. Wait, did they even take this one? Let's see. Okay, yeah, they do go through it here. Oh, see, yeah, they took it right there, and they took the sell. Awesome. Yeah, so that was perfect. They took the exact sell right from here. So it's good. Thank God I pointed that one out too. So they took that sell, and then they took this long right from there. Okay. And then they took these 1, 2, 3, and then 4. Cool. So that's all, guys. I hope you got something out of that one. I thought it was a really good one. And yeah, we'll chat soon. Let's have a great week ahead. All right. Cheers, guys.